Let's bring in Mark Fisher, as promised, of MBF, because Mark is an expert in this field. Mark, it is good to see you.
Thanks.
In terms of computerized trading, is this what happens a day like today? Is this what happens when machines actually take over? What
happened today, it's the matrix. And for lack of a better word, that's the best way to describe it. When I first saw what happened after 2:30, I said, oh my God, a nuclear bomb had to go off. And obviously it didn't. And I think what you just saw today is the tip of the iceberg, because nobody, I mean, I pride myself that we're a pretty aggressive, computerized high-tech firm. Humans can't keep up. There is no way that this is not going to happen again and again and again unless we go ahead and slow the process down.
Sorry, Mark, it's Guy. So what do you think going forward now? This has to, it puts it on everybody's radar screen. What happens going forward in terms of regulation, or in terms of changing the marketplace?
What should really happen for the effective regulation to be done? I think Washington and the CFTC, which I know is definitely looking into this whole, high-speed, algorithmic, and black box, gray box trading, need to go ahead and take a bunch of traders, a bunch of people from academia who understand trading, and create regs and rules to slow everything down, especially in high distress times. I mean, you see the market coming off, you see riots in Greece, you think, oh my God, something must have happened, and everyone just hits the panic button. And the point being, whether it be a knockout trade that happened, whether it be a fat finger, it doesn't matter. This should not be allowed to occur. And I'm talking against what we do, because to us as a trader, this is a great day.
Fish, it's Guy again. Real quick, just explain what a knockout is, because I think that's very interesting. That's sort of one of these derivative trades that exists out there that most people watching have no idea what it is. Could you just explain it in maybe 30 seconds?
Sure. A knockout trade is basically if a stock or a futures contract reaches a specified point, you are no longer involved in the trade, and the person you contracted with now basically has taken you out of the trade, knocks you out of the trade. Or if a stock or a commodity or a currency trades at a level, you lose X amount of money and knocks you out of the trade at a certain point to make it as simple as possible.
Mark, you rarely, if at all, come on TV. What made you come on Fast Money tonight to talk about this?
I came on TV because as someone that's been doing this for over 35 years, I think this is a warning to everybody. This is what's going to happen. It's going to get worse. And you know what? It's interesting because crude oil closed at 2:30, for lack of a better word, and gold closed earlier. And the reason why you can see what happens to crude and gold really didn't move that much when the S&P knocked down 70 handles in 10 minutes. And you know why? Because the markets were basically closed. And otherwise, I guarantee you, I don't guarantee you, I kind of think if this would happen at 1:30 in the afternoon with all the electronic trading in crude would have been down $20 in about the same time.
Wow.
Mark, it's Karen. Let me ask you something. If the kind of regulations that you're talking about are enacted, who would be the beneficiaries? Is that a New York Stock Exchange? Who would really benefit from that?
Karen, in all honesty, I'm not here to tell which trade to make and who to buy, whether it be ICE, NYMEX, CME. I'm here really just to send the warning out that basically, if we don't go ahead and get our trading regs in place, this is going to spread to be a global situation that one day all these markets are going to disconnect, and you're going to have more stocks than just ACN traded at a penny. And this would never happen if everything gets slowed down. There's a mechanism called throttling. The exchanges all have it where they can slow every machine down. Okay? And instead of we're trading in microseconds. We're not even trading in milliseconds. Karen, if you tap your desk, in the time it takes to tap your desk, a good trading shop can put out 10,000 to 20,000 discrete orders. That just can't be allowed to happen anymore. Otherwise, with everything going on, we're just waiting for a disaster. I mean, you saw it today.
Mark, hold on. I want to bring in somebody you know very well, Joe Terranova. He wants to ask you a question. Joe.
Hey, Mark. Hey, Melissa. Hey, gang. Mark, back in 2008 when housing values began to decline, you probably gave one of the greatest analogies to me there was. If you were able to trade houses electronically, what do you think would have happened to property values in the United States?
I mean, Joe, you know the answer. You're asking the rhetorical question. The fact that think about this. When you go to sell a house, you go to a broker. Then the broker has to go ahead and you go to a lawyer. Then you have to go to a title search firm. And what that does is it creates disintermediation in the marketplace, which slows down the process. And that's why, think about it. If you had a finger, you could just say sold, 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 the buy, buy, buy. The housing market would have been decimated.
Hey, Mark, I don't mean to interrupt again. I have to ask. I haven't heard anybody say this, and I'm not trying to be a scaremonger, but cyber terrorism. I mean, there was a 60 Minutes piece about that about 6 months or so ago. I mean, I'm not saying that happened today, but look, you saw what could happen. Is that a fear for you as well?
I'm not enough of an expert to talk about cyber terrorism, but I will tell you that with or without cyber terrorism, we're going to create this mess ourselves if we're not careful.
Hey, Fish, it's Gary. Listen, I know you don't want to make market predictions, but you had the CEO of the New York Stock Exchange at the end of trading today say he thinks tomorrow's going to be ugly. You're sending a message of what needs to be done, but you know the way Washington works. You're not going to see changes until they have panels and they have hearings and they have committees. So what do you think today will do for the next sort of 6 months in terms of trading activity and confidence? Because whatever you're talking about is not going to happen for months.
Well, I just to defend Washington, and I'm not here today, I think that really the CFTC has a better handle on this than the prior administration had, and I think they will be proactive about it. But you're right, it's going to take months. But I think what's going to happen is this is going to scare everybody. I think people are going to go ahead and triple check orders. I think every prop desk and every execution desk, whether it be on all the big 5 desks, are going to have to put in safeguards so that they make sure that a client really wants to sell, you know, 1 billion or 10 billion or 5 billion of security. I think that basically this is going to tell everyone to just slow down. Because if you don't slow down, this is going to create a global catastrophe. And again, we're going to have no one to blame but ourselves, because these are the rules the way they're written. And firms like ourselves are going to try to go ahead and capitalize on whatever rules that Washington and the trading community set place.
All right, Mark, thank you very much. We hope that you'll come back to Fast Money and tell us more about what needs to be done in Washington to protect the traders out there. We appreciate your time, Mark.
Thanks.
Mark Fisher of MBF. He raises a lot of
he's
good
an expert.
points.
Fish is an expert. The fact that he came on the show, he's never on any TV show. I mean, the fact that he came on, he feels passionately about it to get on the show and to be on television speaks volumes, and people should listen. Again, that's just one context of the day. Again, the market still closed down 350, which is the other thing we should focus on.
And I think what Mark is saying is we're going to have a hard time in terms of price discovery over the next several months in terms of what today did. And that, when you have a hard time identifying price discovery in any capital markets, that takes liquidity out, and that's bad.
Okay, we got to take a break. We have much, much more in our very special edition of Fast Money coming up next.